Hi, Mike Flores here on behalf of TradeProsper. The purpose of this video is to provide you with an intro to CFDs. Let's begin.
What is a CFD? CFD stands for Contract for Difference. They are derivative contracts. You never actually own the physical stock or future in the CFD market that you are trading. CFDs are agreements between a buyer and a seller to settle at the close of the contract the difference between the opening and closing price of that contract. CFDs were created in London and grew in popularity starting around the year 2000. They were originally used by large institutional traders because they could hedge their exposure of stocks listed on the stock exchange. However, they could do this paying little margin, in some instances as low as 1%. Another key reason why institutional traders used CFDs were that since no actual shares traded hands, they could avoid pricey UK stamp taxes or UK stamp duties. But by the late 1990s, CFDs had hit the retail market via online trading platforms. CFDs have little regulation. They do not have an expiration date or standard contract terms like futures. This means you can trade any market your CFD provider has. There are no rules on shorting, no upfront commissions, no government regulation, and low margins. All good for the trader. CFDs can be traded on futures and stocks, and they usually trade one-to-one with the underlying. However, you must remember you have no ownership of the underlying, which means if you trade CFD on stocks, you have no voting rights on that stock. CFDs are illegal in the United States. I guess the government feels like it needs to protect you from high leverage. I guess. CFDs do have counterparty risk. They are not exchange traded for the most part. The Australian Stock Exchange does list some CFDs, but besides that, CFDs are known as over-the-counter instruments, meaning that the investor who's trading in the CFD trades directly with the broker. This is why it's super important to check the credibility of your broker. There are many good and many not so good CFD providers out there. CFD providers trade on lower margins in futures and allow for more margin on stocks and FX. We mentioned this before. Margin on CFDs are really low. Some CFD providers provide 200, even 400 to 1 margin on foreign exchange. In comparison, in the United States, margin on FX is capped 50 to 1. What this basically means is for every $1 of margin, you can control up to $400 of foreign exchange currency on a CFD. In the US, it's again 50 to 1. There are two types of trade execution CFD brokers. One is called a market maker, and the other is called direct market access for certain stocks. A market maker is basically a middleman. He's taking the risk of making you a price onto his portfolio. He will make his clients a bid-ask price quote based on market prices. The market maker model allows you access to more markets. You can trade a vast variety of CFDs. The way the market maker makes or loses money is based on your position. The direct market access broker model is where the broker gives you a bid-ask price based exactly on the shares of where the stock is traded on its exchange. Now, this allows full transparency, which is really good for the investor. The way the broker makes money on this model is just through transaction fees. Again, the downside with the direct market access model is that you will have very limited amount of markets that you can trade. There are lots of CFD providers out there. Some of the more common and favorable ones that I've heard of are Plus 500, AvaTrade, Markets.com, and Interactive Brokers. That's just to name a few. However, please remember you must do your diligence when trading in CFDs. There are a lot of irreputable brokers out there, so please do your research before you jump into this type of trading.
Thank you very much for joining us for this intro to CFDs. You can check out our website at www.tradeprosper.com. Remember, trading is a marathon, not a sprint. It takes focus, action, smart work, and dedication. On behalf of TradeProsper, This is Mike Flores. Bye now.